I want to welcome back Andy Schectman as the nation descends into chaos and crazier headlines come up. There's just so much to talk about. Welcome back, Andy.
Good to see you, Elliot. Thanks for having me again. Appreciate it.
Absolutely. Welcome back. So, one headline I want to talk about, which speaks to kind of the political divide, the populist unrest, the turmoil, which always kind of bubbles up when empires start to decline and can no longer kind of meet the needs of the people. We have the trucker protest in Canada. Then we have this headline out of America. Voters fed up with COVID are turning against Biden and the Democrats. The White House insists it can defeat the virus, but the nation is increasingly willing to live with it. And so this just speaks to kind of people turning against the party in power.
I think it's long overdue. I think there have been mixed messages, mixed signals. There have been wear a mask, don't wear a mask. It's exhausting. But the reaction that the governments and the local governments in particular, these mandates, which are really basically illegal, they have to be voted on by some sort of like legislative branch, not just imposed by a mayor or a governor. People are fed up with it. People are tired. I, for one, voted with my feet. I moved out of Minneapolis for a lot of these reasons into Florida, where the governor has, in my opinion, a much more rational, sane approach. But I think in general, what you're seeing is the understanding or the belief that this is something that will probably be here, that we'll all have to learn to deal with. And people want to get about their lives again. They don't want to continue to be mandated into lockdowns and into certain forms of control that is, I think it's wearing on people quite a bit. And then when you see the hypocrisy of the leaders who are imposing mandates but posing for pictures without wearing it, saying they're holding their breath, or look, I just think that it's going to continue and continue. This divisiveness is going to continue, and this revolt against the establishment is going to continue. And I think you're starting to see, luckily, I think you're starting to see some sanity prevail, like in the United Kingdom, where all the mandates have been removed, wherein I think it was in, I think it was Brussels, one of the countries in Europe, just removed, that was Denmark, I believe. They said that the pandemic is over. You're beginning to see even Canada talk about loosening up the mandates. And, look, that's what people are talking about here. It's being mandated and directed into doing something, having our freedoms taken away, our liberties taken away. And I think it's starting to wear thin on people. And I think it's long overdue, Elliot. And quite frankly, I think it'll probably get a little bit worse before it gets better. I was just reading my local Star Tribune newspaper from Minneapolis, where I used to be from, and you have, a major news anchor saying this is a hellhole here, and I don't think people should feel safe in downtown Minneapolis. And the what's happened, not just with the mandates, but with the defunding of the police, with the crime that's increased dramatically, with the fact that there's no one working in metropolitan areas any longer. Everyone's working remotely, and all of these problems that have been created by, not by the virus, but by the reaction to it, has created, I think, lots of problems that people didn't, really factor into the equation when this all started. Downtown Minneapolis used to be one of the safest, greatest places in the world to go see a Twins game or a Timberwolves game, and go to a bar or a restaurant before the game or after. Now, there's nobody down there. The occupancy in downtown Minneapolis when I left a year ago was 8%. 8%. And so you have no police down there. They've been defunded and vilified. You have no business people down there because they're working from home. Corporations like Target and Wells Fargo and all of these big employers in downtown Minneapolis still haven't come back and have told their employees to work from home or work remotely. So you have a very unsavory cast of characters roaming the city with the restaurants and the bars and all of the establishments closed, hanging on by life support, and yet we're being told by our politicians in this environment to continue these draconian style mandates. And I think it's starting to wear thin on people, and it's starting to have a real effect on a lot of these major inner cities, Minneapolis being one of them. So I think it's long overdue, and I think I'm all for people standing up for their liberties in a very peaceful manner, just like the truckers are doing up in Canada.
That's a great point. Kind of like how like you said, the K-shaped recovery is kind of leading to a lot of this socioeconomic divide and the restlessness that you mentioned and the homelessness. Here's an article I just read today. Homelessness in San Francisco Bay Area is now so bad, residents are being asked to house vagrants in their own homes. What do you think of that?
In what is and always has been one of the most expensive real estate areas in the world, or at least in the United States, I think it's absurd. I think instead they should work on cleaning up the city. I know that San Francisco is a nightmare. I have family there, family who has a $3 million apartment, and they walk out of their apartment and there are people shooting up heroin right there and defecating in the street, sleeping 40 feet away from their front door. We should be embarrassed. We're looking like a third world country. And while I'm sympathetic for homeless, while I'm sympathetic for people who are down on their luck, there has to be some sort of law and order. And a great city like San Francisco is certainly a poster child for what is wrong with this country. And that's an understatement, really. If you've been there, I have, and I've seen it with my own eyes. And it's not a place that you want to go hang out any longer. That's for sure. There's open drug use. There's open. People are going to the bathroom all over the place. There's begging on every street corner, pandering on every, as you're driving down the street, people will come to your window and try to wipe it. I mean, it's unbelievable. Elliot, I was there just a few months ago, and I couldn't believe what I saw. So no, I think that this is what I mean by the law of unintended consequences, the mandates and the lockdowns, and have created a situation where you have really no one but the homeless and the troublemakers running around the big cities. Everyone else is moving away and moving out of the big cities or working from home, and this is what happens. It's a scary thing. Another reason I moved from Minneapolis to Florida. There's law and order here. It's a warm city. A warm state, but you don't see homeless anywhere. People are allowed to go into restaurants without showing a vaccine mandate or a vaccine card. You don't have to wear your mask. Some people do, but you don't have to. They're allowing people to get back to life here. And I think that's the most important thing that's being lost, is that if this really is here to stay, then we need to learn how to live with it. And I think that's what's being missed in a lot of these major cities. All these blue cities, they're missing it, and they're pointing the finger at the wrong people.
Yeah, like you're saying, like a lot of the government's rules that were imposed, have caused a lot of this divisiveness. They're fighting a war. U.S. debt reached $30 trillion, like we talked about last week. And so what it means is that, are they going to be able to afford the solutions that are needed? It does seem like, as the financial discipline goes down, everything kind of goes with it. And I always like to draw the comparison to World War I, like post World War I Germany, when they had these reparations they couldn't pay. Well, when can the government pay the $30 trillion in debt? I don't know.
The $30 trillion in debt doesn't even include the unfunded off-balance sheet liabilities of Medicare and Medicaid and Social Security and government and military pensions and the like, which exceed 100 trillion. And a trillion seconds ago was 31,688 years ago. The numbers are so big. And the question is, are we the dominant superpower that we once are? a superpower that's accumulated 30 trillion in debt, which is, by the way, 25% larger than the entire U.S. economy. A superpower that surrendered tens of billions of dollars of military equipment to the Taliban and to their enemy, to the superpower that's embracing socialism, and which is vilifying capitalism, which is the system that created all of this wealth to begin with. A country that is a superpower that is creating wicked amounts of inflation, and not dealing with it. Pretending they're going to deal with it and get tough on it. But if they do, they're going to blow up the entire economy. We are at a crossroad. And I think that when you talk about this K-shaped recovery, that's really part of the biggest problem, is that you have wealth that has increased exponentially, and then you've had hardships that has increased exponentially. People are having a hard time just putting food on the table. And this is because of the massive increase in the cost of living. But the very wealthy are getting wealthier as their assets continue to move up. And, you listen to what the Fed is talking about, Elliot, and if you think the shit has hit the fan already, I would argue you haven't really seen anything yet, because one of the things that Powell was talking about was limiting their balance sheet to only treasuries. In other words, they're talking about not only raising rates in March, but also stopping asset purchases altogether, to which they've been buying about 130 billion a month in not just U.S. treasuries, but mortgage-backed securities, and most of it crap. And Powell is talking about selling off the balance sheet and limiting their balance sheet the way it was supposed to be to just government treasuries. I suppose I shouldn't say supposed to be, because they have the right to hold Fannie and Freddie securities, like government-backed securities. But the point of it is that you have $2.7 trillion in mortgage-backed securities that they're holding on their balance sheet. So if you think it's gotten bad now, wait till they start to, if they really do hold true to their word, and they dump $2.7 trillion worth of mortgage-backed securities in short order onto the market. That would spell disaster for the real estate market in a state or a city like San Francisco, where real estate prices are extraordinarily high. And you have this massive homelessness and disorder in the city. You could see massive crashing of markets in cities like San Francisco. You had all of this money that's been created and low interest rates. You incentivize like hedge funds to get into the real estate market and gobble up properties, and then rent them like through BROP or whatever it's called, and you have a massive amount of real estate that was financialized and held by investment firms that are looking for a return. And if you see markets collapse, like a real estate market collapse in a place like San Francisco, and a dumping not only of the government-backed, or the Treasury or the Fed mortgage-backed securities, but also then you start to see the hedge funds start to unwind and unload their positions. If you think you've seen trouble, just wait. When you can't unload your $3 million apartment for any price, or certainly well below what you owe on it, that's when you'll really start to see problems. So either they do this and get tough on inflation and protect the value of the dollar, and by doing that, you're going to see real trouble in the stock market, the bond market, and the real estate market, or it's a head fake, it's jawboning, and it'll be more of the same, and you'll see higher inflation, which will only make it tougher on the lower and middle class families. So either way, we're in a very interesting period of time, and that's it's a Chinese curse. May you live in interesting times. I'll tell you, emblematic of the insanity that we see right now was a video that I watched just the other day by a economist for the St. Louis Federal Reserve. And this guy gets on and says, listen, he says, does the national debt really matter? And he says, people view debt from a household perspective, that from the perspective of a household, you're talking a finite lifespan. But he says the governments, on the other hand, their lifespan is indefinite. So a government can really never have to worry, I guess. They never need to worry about repaying their debt within a finite period of time. They can just roll it over indefinitely. And I'm thinking, did he really just say that? And he says that treasuries represent a claim on US dollars. And because the US government can print dollars, there's never an economic reason for the treasury not to be able to repay back in dollars. And he says that the net debt constitutes a liability for the US government, but it's an asset for someone else. And basically he was saying for the homeowners or for the citizens of the United States. This is like in your pension fund or in your insurance policy. And he says this isn't a burden on our children because that liability corresponds with an increase in household wealth. So they just flip it around, this insanity, all the way around from the top down. Whether you're talking mandates by our local governments, which are illegal, or talking the direction of the Federal Reserve, which is driving us off a cliff, there's insanity everywhere, Elliot. And I think that's what's really getting people tired. They're tired of the insanity. I know for one, I am. And it's hard to keep up. And when you hear people speak like this, that the $30 trillion debt doesn't matter because the lifespan of the government is indefinite, you can just roll it forward. You have to wonder, I mean, what the hell is going on? Where are we living? It's modern monetary theory is what it is. And who's come up with these ideas and where does it ultimately lead to us? To me, it leads to inflation being the choice over austerity. And I think ultimately, they will not sacrifice the markets and they will just sacrifice the dollar. I think that's the path that we're heading down.
Yeah, absolutely. So in that environment of unrest, and then they're raising interest rates, and we're seeing headlines like this, which just came out on February 9th. Home buyer demand for mortgages drops 10% as higher interest rates price some people out. The average contract interest rate for 30-year fixed mortgages increased to 3.83% from 3.78%. And mortgage applications dropped 10% last week.
Well, they often say that a 1% rise in interest rates corresponds with a 10% decrease in home prices. So they're talking about raising rates to 2%, but that's spitting in the ocean, Elliot, because you have inflation at 7%. So, and that excludes many of the things we've talked about before, that real inflation, when factored against the way it used to be measured, would be about 15% right now. But even at 7%, if you raise interest rates to 2%, you kneecap the markets. Like this article is saying, by just raising it 40 basis points, it already corresponded with a 10% drop in mortgage applications. But raise it 200 basis points, you've done nothing in terms of inflation because you're still 5% real negative in that example. 2% rates versus a 5% or 7% inflation is -5. But you haven't done anything substantive. All you're going to do is destroy the markets. And so what does that say to areas where, real estate values have gone exponentially crazy, like San Francisco, like New York City, where there's lawlessness and smash and grabs and drugs going on and people sleeping on the street. And, what does it say when rates start to really rise? And, a 2% rise in the federal funds rate, so puts mortgages at 4, 5, 6%. If you keep going, what happens to the real estate market? It's over. And so that's the kind of issue that we have to deal with. And when this realization hits the mainstream, that if they raise rates, everything blows up. If they don't raise rates, let inflation go, everything becomes too expensive. What do you do? When that realization that it becomes stark, that the Fed has painted themselves into a corner for the first time ever, then what happens? That's when I think the bond market the Fed will lose control of the bond market at that point. That's when the bond traders all run for the hills, interest rates spike, everything collapses. And that's Mother Nature right there. And they have been trying to hold Mother Nature back for a long time. They should have let it all blow up in '08 instead of papering it over. As we talked about just the other day, when the new report that just came out of the Levy Economic Institute, where through a Freedom of Information Act, they were able to obtain some records that were sealed by the Fed for 12 years. They challenged it all the way to the Supreme Court to get it released, and they did. And it showed that it wasn't $5 trillion that was created, the 700 billion in TARP, the 700 billion in infrastructure, and the over 3 trillion to the banks. That's what the Tea Party was formed out of. 700 billion alone, people thought was insane, but it was $29 trillion that was handed out to the banks and to banks all around the world, spreading and sowing the seeds of inflation globally. We ain't seen nothing yet. And I think that all of this inflation, that all predates COVID spending. So when you talk about all the money in the repo market that's been thrown into the market to keep the wheels going, that's why you see asset prices off the chart. And if they try to raise rates and create a level of sanity, a semblance of sanity, where prices can try to find an equilibrium where you have real price discovery, it's over. And so what do? They're going to have to continue to do what all administrations have done, and that is to choose the printing press over austerity, over the tough decisions. And I think that's what's going to happen.
Yeah. So what happens to the national debt when, the markets crater? They have to step in. They know that people are super unhappy, so they better try to pump the markets up. What happens to that $30 trillion national debt as they try to pump the markets even further after this kind of like whole house of cards starts to wobble and even collapse a little bit?
It just keeps on increasing exponentially. And, people aren't even talking about the off balance sheet items. We are insolvent. We are an insolvent country that is running wicked levels of inflation. We can't even pay the electricity bill and the cable bill, and yet we're talking about spending another $3 trillion in infrastructure here. I mean, they're spending us into oblivion, and I think that people better get used to the inflationary pressures that we're seeing right now. And I think what will happen is actually stagflation, or hyper stagflation, where you have rising prices, a little or no economic growth, as these prices and these supply chain problems are going to price out of business a lot of the small and mid-sized companies. And so you're going to have just the very, very big companies that we're all going to go to, but you're going to have a fewer choices. You're going to have fewer people producing things and higher prices. You're going to have stagflation. And I think that's the worst of all possible outcomes. But I think that's where we're heading. And I think people need to protect themselves right now, because the government really is out of choices, and they will do what every other government has done since the beginning of time, and that is they will choose inflation over making these tough choices. Because if they make the tough choices, everything blows up. And that's what's happened due to the environment that the Fed has enabled this country to get into, with super low interest rates, lots and lots of money, and very few, if any, regulations that allow the big hedge funds and the big banks to create massive speculative bubbles in assets. And the only way to keep that from not blowing up is to keep printing more money, to keep accommodating, to keep stimulating. If they stop just a little bit, everything just starts to deflate under its own pressure. If they actually raise rates and start selling off the balance sheet and actually adding fuel to that fire, I think you'll see the beginnings of a recession into what could very well be a depression. And I think that's the biggest fear that the Fed faces. And that's why I really do think that they will not let off the inflation pedal. They may feather it a little bit just to scare everyone and let the market start to crumble. And then they'll step back in and resume. And the reason I think they'll do that is that they've lost the power of their monetary tool bag with interest rates for the federal funds rate at 0. They have to have that up near 2%. You can see what's happened to the 10-year treasury. It's already almost at 2%, but they need to let it get up there so that when they come back in to reaccommodate the market and to stimulate again, they have to be able to start from a higher can't start from zero, because if the world reserve currency goes nominally negative, not just real negative, but nominally negative, it will spell certain disaster for the world reserve currency. And I think that's when things would really get frightening. So we're right on the razor's edge, though, Elliot. And so that's why I think you're seeing, and they're all connected. You have, social, economic, moral, religious, geopolitical, white versus black, red versus blue, vaccine versus no vaccine. I mean, it's just the divisiveness has ripped apart the fabric of the United States. It's no longer united in so many respects. And I think that's kind of the part that everyone's exhausted of.
Exactly. So it is all connected 100%. And so, in this environment that we've been talking about, we want to see like where money is going, how investors should behave. Here's an article saying that as stocks tumble, the world's largest gold ETF saw record buying demand as people seek out safe haven assets. As CEO of Miles Franklin, what is your take on gold demand? And what is your take on the whole gold market overall in this time?
Well, what that article is speaking to is what the big money is doing, and you're seeing large inflows into the ETFs. You're seeing huge purchases by central banks, by commercial banks, by sovereign wealth funds. I think that there is a segment of the population that is waking up to the importance of owning precious metals in this environment, one of the few asset classes that isn't at all-time highs. But I think that that's indicative of money that's looking ahead. Most people believe that, all of our problems have always been solved by the accommodating Fed, and they'll come in and do the exact same thing once again. But the big money, the smart money, always moves before the public does. They move in a fashion where they're proactive. Since 2017, this is a narrative that really we've seen. Biggest money in the world slowly exiting stage left. You're seeing huge amount of deliveries come off of the London Metals Exchange and off of the Bank of England. Huge amounts. And in fact, what was it? Just the other day, let's see if I have the number here. I was just reading. Yes. I don't have the numbers. I thought I did. I don't. But in any case, huge amount of gold and silver coming off the Bank of England, off the LBMA, huge amounts being withdrawn off of the ETFs. The biggest money in the world is accumulating gold and silver, Elliot, and I think they're doing it ahead of the public. The demand for gold has been much more tepid than the demand for silver has been on a retail basis. But I think when you look at what's happening on COMEX, what's happening from the ETFs, and the reason the big money takes money out of the ETFs, and we've seen a lot of that lately, is because it sidesteps the reporting requirements that they would have to have on COMEX. So you're seeing huge withdrawals out the backside of the ETFs, and the only groups that can do that are the authorized participants, like the commercial banks. So whether it be withdrawals out of the London Metals Exchange, off the Bank of England, off the ETFs, off of COMEX. This is a narrative we've seen since 2017. You have Russia that just came out and said they have more in the way of gold than they do in reserves than they do in dollars. You have India, and you have China, you have the Bank of Serbia, the Bank of Turkey, Hungary, Poland, the Dutch National Bank, the Austrian Bank. They're all accumulating it, all of them. And they continue to do so behind the narrative, this anti-gold narrative, behind the price suppression. Yet the biggest money in the world is proactively accumulating metal, when the rest of us are fixated with Bitcoin, going above 40,000, whether it be the Dow Jones or the S&P at all-time highs. These are we're being misled and misdirected, and the biggest money in the world is accumulating gold and silver. So look, when you look around, where is there to put your money safe these days that offers a semblance of value? a market that's not at all-time highs, a market that has history. And as I've said on your show before, a market that's lived through 2 world wars, German hyperinflation, and the Great Depression, and every pandemic. And this is why you own gold. You own it as wealth, and silver. You own it as wealth. And that's what the big money has been doing, I think, rather convincingly for quite some time now.
Absolutely. So as CEO of Miles Franklin, where can people go to potentially buy physical metal as insurance against this whole type of scenario that we see happening?
We would ask them to send us an email at info@milesfranklin, mention the early stage investor in the subject line. We'll make sure your listeners get personalized service and the very best price in the country. You can send an email directly to me at Andy@milesfranklin. I'll be happy to respond and answer it. And we'd love the opportunity to work with your listeners. And honestly, Elliot, I think that there's never been a more important time to have a portion of your net worth in precious metals. There's never been more important time. And I'll tell you one thing. In all the years I've done this, which is going on 33 years, getting product has never been more difficult. In fact, it's bordering on almost impossible to get certain items, and that's never happened before. So this is with only 0.5% allocation to precious metals throughout the whole U.S. financial matrix. And if we see an awakening, like the fact that the Fed has painted itself into a corner and is out of options, we see that awakening. I think you'll see very quickly this entire industry be defined by the inability to source any product whatsoever. And I know that sounds far-fetched and people think I'm talking my book, but as God is my witness, I do believe that is the biggest threat this industry faces. You talk about supply chain problems and commodities and consumables, you'll see the exact same thing in precious metals. And this is not just a North American phenomenon. You have people globally who have been awoken to what's happening to currencies and economies that have been inflated and asset prices that have been inordinately and unjustifiably inflated. So, yeah, I think that this is the time, because when that awakening happens like that, it'll happen. In 2008, Elliot, when gold went from 1,000 to 700 and silver from 21 to 9, you would think that everything was being dumped onto the market. There's tons of supply. Within 1 week or less, every single ounce of gold and silver globally was gone. You couldn't find anything anywhere. All the mints were shut down. All of them, US, Canada, Australia, South Africa, United Kingdom, whichever one, Canada. All the 6 major mints were shut down. All the refineries were shut down. You couldn't find anything for months on end. It happened like that as the price was falling, because it was a paper-driven phenomenon and everything got gobbled up. And I thought we were going out of business because there was no product to be found anywhere. And so I think that if in that respect, and in that light, knowing what I think is coming, I think that's the biggest issue people will have in trying to get precious metals is finding something that they can get that is a good value and that is something worthwhile to own. I think that will be I think that is the biggest threat to this industry, bar none. And it's something that I see coming.
Yeah, well, every crash we've seen that just supply just goes away and people can't access physical metal. So really amazing insights. Thank you so much for stopping by.
Absolutely.
This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.